Hello everyone. Most traders don't fail because they have a bad strategy. They fail because they go into battle without a shield. Over the last few weeks, so many of you have reached out asking the same questions. How do I stop the fear? How many shares should I actually buy? And what do I do after a losing streak? I heard you loud and clear, and that's exactly why I am making this video today. Think about this. Have you ever found a perfect setup, but your hands shook when you tried to click buy? Or maybe you hit two stop losses in a row and felt that gut wrenching fear that makes you pass on the third trade, only to watch that third trade take off to the big profit. The difference between a gambler and a professional is not a secret indicator, it's the math you see on this screen. Today, I am pulling back the curtain on the 1% golden rule and showing you how to size your positions so that a loss never feels like a defeat. We are going to calculate your exact quantity, set your max daily loss limit, and build a system that makes you emotions irrelevant. By the end of this video, you won't just be taking trades, you will be executing a business plan. If you are ready to stop trading with hope and start trading with math, let's start. This is the risk management and position sizing template. So let's go deeper into this. Here, if you see what I have mentioned, suppose you have a total capital of 1 lakh rupees. Okay. So, what should be the my daily max loss limit? I keep my daily loss limit to 5%. So whenever my 5% daily max loss hit, I will stop taking the trades. Okay. So here if you see 5% comes out to be 1 lakh, 5% of 1 lakh is around 5,000 rupees. Okay. And another rule as per our rule book, I hope you all have gone through the rule book. If not, please go and check my first video. There I have clearly mentioned that all the all the important points about the rule book. So here I can take max 5 number of trades at any point of time. And in each trade, I will only allocate 1/5 of the total capital. So here, capital allocation per trade is 20,000, 20,000, 20,000, 20,000, 20,000. That comes around 1 lakh rupees, right? Now, here, this is trade type. Which trade you would like to take, whether you are taking a buy trade or sell trade. This I can check from here. If I want to take a buy trade, I will select a buy. If I want to take a sell trade, I will select here. Then I will enter entry price, required margin for one quantity. See, if you are doing a swing trading or positional trading, then there is no need to calculate a required margin for one quantity because you know what is the required margin, right? Sorry, the price of the particular stock is only the required margin for that particular for purchasing that particular one share. But in case of intraday, you are using leverage. So you may, some brokers may provide you 3 times leverage, 4 times leverage, or 5 times leverage depending on the broker. So accordingly you have to mention here how much margin is required for taking a one quantity. Okay. So accordingly it will calculate total quantity. Then SL price, accordingly risk amount will be calculated. Then our golden rule, that is risk as per 1% golden rule. So here if you see, my 1% of total capital is 1,000. So my risk should always be within 1,000 rupees while taking any trade. Always remember this. So this is what about the template. Let's understand this with some logics so that everyone understands how we should actually do these things during the live market. So take a example, that is a Tata Steel stock. Okay. So in case of Tata Steel, suppose I want to take a buy trade. 1 second. So price here is 188.2. Okay, so what I will do, I will select here MIS. If I want to get take it at a market price, I will select market, but generally we don't take at a market price. We generally take at a candle high or candle low, right? So suppose my candle high is at 188.4, so I will enter a trade at 188.5. Order price same is trigger price 188.5. So if you see here, my required margin for one quantity is 47.69. I will put this here. Sorry, first I will put entry price 188.5, 188.5. Then required margin for one quantity, that is 47.69, 47.69. So based on capital allocation per trade 20,000, I can take 419 quantities of Tata Steel at 188.5 price. Now I need to uh, select SL price also. So I will look for exact SL what is coming out to be as per the setup. Suppose my SL is coming out to be 180, 185 for example. I am just taking for example 185. So if you see, if I put 185, my risk amount is 1467 rupees, which is exceeding my 1% golden rule. So I will immediately skip this particular stock. I will not enter into this trade. Though the setup is very promising, I don't mind because it is not following my rules. That's why I will skip this stock and move for the next stock, next setup, next stock and find the setup. So here, suppose my SL price is 187. So see, my risk amount is now 629 rupees. Now I can definitely take the trade because see, should I take a trade? Here you see, yes, risk is under limit. Okay, so I can take this particular trade. Tata Steel. So this is what my first trade, and also I can keep my target price is coming out to be directly calculating the target price. But if my 188.5 is my entry price, SL is 187, then my target price will be as per risk reward 1 to 2, which is 191.5. So here you will get target price also, SL also. So no need to go anywhere else. This is everything comes in this particular template. Okay. Now suppose we will just go fast. Suppose second trade I will take off ONGC. 1 second. Or anything like suppose power grid for example. So here also MIS, market, no market, SL. Suppose here I am taking a sell trade. So I will select sell here. Now the current price is 257.3 and I want to take a trade at 256.5. Okay, so I will put here 256.5. So here comes out required margin for one quantity. So for one quantity I need 64.89 rupees. So I will put this here. Entry price is 256.5. 256.5. Required margin 64.89. 64.89. And my SL is, as this is a sale trade, my SL will be 256.5. Suppose my SL is at around 259 rupees. Okay, as per the setup or as per the candle's high. Now if you see, if my SL price is 259, a risk is 770 rupees. So it is within my risk limit. I can take this trade and it is automatically calculating the target price also. So this will be my entry price, 259 will be my SL, and 251.5 is my target based on risk reward 1 to 2. You know other rule also, right? Suppose while in live market, if trade not goes in my favor and if it closes above 20 EMA, then I will exit the trade at high of the that particular candle which closes above 20 EMA. Okay, so our SL maybe you don't give need to give this 770 rupees of SL. your SL might come around 500 rupees only. Fine. So that rule everyone knows. Now suppose I want to take a third trade. Suppose I am taking a third trade. Take an example of NTPC. Okay. So for NTPC, what I will do again, MIS, SLL. Again, I will take a buy trade. Current price is 346.35. So my order price is 347, and for one order I need 87.79 rupees margin. Okay, so I will put here 347 entry price and 87.7 is required margin for one quantity. Here suppose my SL is around 344.5 rupees. Okay, I am taking a buy trade. Sorry, here I need to select buy. Okay, so 344.5 is my SL. Sorry, second trade was of which trade we have to power grid, right? One second. Power grid, sorry. Power grid. Third is NTPC. So this is my SL is 344.5. Stop loss is definitely within my limit, right? So my risk amount is almost around 570 rupees. Yes, I can take this trade. Suppose here if you see how this gives me a correct picture whether I should take a trade or not. Suppose this my entry is 347 rupees and my stop loss is around, say for example, 342.5 rupees. Okay, as per the setup or as per the candle's low. Then my risk is 1026.2, which is above my risk limit. So should I take a trade? No, risk is too high. So I will simply skip that particular trade, go to the next stock. Fine. So here if I take a trade, I will take at 343.5 as mentioned. Sorry. 343.5. Okay, I can take this trade, right? Now let's go to the next trade. Which trade? HDFC Life. For HDFC Life again, MIS, SSL. Here I will take a, for example, setup is developed for the sale trade. Okay, so current price is 722.5. I will take a trade at around 731 as per the setup. And for one quantity I need 185 rupees, for example. So here 731 required margin for one quantity is 185 rupees. This is HDFC Life. Last one was NTPC. Okay, so 731 is my entry price for a sell trade. As per setup, suppose my exit SL is coming out to be 736, for example. Yeah, 737. Let's take that. Okay, so here if you see my risk is within limit, I can take this trade. Suppose this is not 737, it is coming out to be 740. Still it is under my risk amount, so I can take this trade. Suppose this SL price is around 742, then risk is too high, above my 1% limit, so I will not take this trade. So let's keep it at around 738. So yes, I can take this trade because it is within my limit. This is 738 is my SL, 717 is my target price. Now let's move on to the last trade. Let's take an example of SBIN. MIS, SLL. Suppose here I want to take a buy trade. Okay, so buy. Current price is 1042.3. As per setup, my buying price is around 1044, for example. 1044. I'm not explaining here setup or chart because everyone knows how to check the chart which price we should take for taking a trade. So I'm not talking about that. So suppose my buying price is 1044. So required margin for one quantity is around 264 rupees. So I will keep here 264.13. 1044 is buying price. 264.1 is my uh, required margin for one quantity. So I can take around 76 quantity, total quantity, which I can take in SBIN trade. SBIN. Now, what should be my SL? Here, suppose it's I have to trade at around 1044 and my SL is coming out to be 1035, for example. So yes, 681. So it is within my limit, so I can take this trade. Suppose this SL was around 1030, then see, risk is high, no risk. No, risk is too high, so I won't be able to take this particular trade. Okay, so what this? Suppose, so this is what, one second, 1044 is my buying price, 1030, yeah, 1035 is my SL, for example. Then I can take this trade, right? So my buying price is 1044, 1035 is my SL. The risk is within my limit, so I can take this trade. My stop target price is coming out to be 1062 as per risk reward 1 as to 2. Also keep in mind, whenever I am keeping a, once you place a trade, then suppose I place a trade at 1044 in case of SBIN. Okay, now quantity is around 76 rupees, right? 76 rupees. So now for keeping the placing the stop loss, I will always use stop loss market order, so that if suppose your price gets skipped, sometimes happen because of some liquidity issue, sometimes it may happen that it will directly jump from 1036 to directly to 1034.5 and immediately it goes to 1030. So in that case I need to avoid that particular slippage. That's why I will, what I will do, I will keep a trigger price as my stop loss price only, so stop loss market. So whenever it crosses 1035 or it comes around 1035, it will immediately exit the trade at any price, whether it is 1034.5, 1034, 1034.7, it's fine, no worries. So keep this mind very, this is a very very important point, because what happen, see, if even if your price comes around 1030, SL is your 1035, and if it jumps down to directly to 1034 also, or 1033 for example, 1034, 1033.5, it got executed at 1033.5 for example, then what happens, here your risk was around 681 rupees, but if it goes if it got executed at 1035, if it gets executed at around 1033.5, 1033.5, then your risk will be 795, which is still inside your 1% risk rule. So always remember this thing, don't get worried because of 1.1 or 2 points or 100 or 200 rupees here and there, no worries, because that can always be recovered, right? But never, we should never have a big dent on our capital. Okay, so here if you see, my total risk I can take per day is 5000 rupees, right? So here if you see, if I take all of these five trades, and if all of those five trades are active, then see here, overall, so in case, suppose it generally doesn't happen that everywhere your stop loss hits, right? At least one of the trade will definitely give you profits or break even or anything, suppose maybe minor, all trades close in minor loss also, but here I am considering in all five trades, if your stop loss hits, then also you will lose only 3749 rupees, remember. So this is well within your limit. You are still within your max loss per day limit, right? So people always ask me when I should stop taking the trade. This is the best calculator which you can use, right? Always go with maximum number of trades, 5 trades per day. Sorry, maximum trades open should be 5. Suppose your SL got hit in one of the trade at the start. Maybe you take a trade at around 10 a.m. and your SL got hit at around 11 a.m., right? And you see your loss is around maybe around overall loss is around 1400. Now again in next 15 minutes your next stop loss also got hit. Now you are seeing your overall loss is coming out to be 1700, and other three trades are maybe one is in break even, one is in good profit, one is in small profit. Then you might be around loss of 1700 rupees, for example. Then also now your number of active trades are 3, right? You can still take next trades, no worries, and you don't need to fear while taking the next trade. If you see your setup, then you will definitely go for that particular trade because you have not exceeded your risk limit for the day. So always remember this point. This is the most critical and most important point because most of the traders were asking me after hitting two successive losses, after hitting two successive SLs or three successive SLs, I got panic if I can take a trade or not. Suppose here take an example of Tata Steel, Power Grid and NTPC. Suppose my these three trades are active, and if those got hit, stop losses have got hit. So I have already in a loss of around 2197 rupees, right? 2200 rupees, for example. I mean a loss of 2200 rupees. So I should not get worried, or I should not get get worried, or should I take a next trade or not? I should not fear to take a next trade if I see my setup, right? Because my loss is well within my max loss per day limit. So next trade I will take as per my setup. I will again follow the same process. Nothing, no change. Always remember you have to follow your rules without fail, and that is why people, you see most of the, I always post things on Twitter that I made losses today, I made losses, but making losses will teach us how to survive in the long run, right? Profit is fine, but actually making small losses will help us to grow in this business. Always remember this particular thing. So I hope everyone understands this risk management and position sizing rule. Let me know if you have any doubts in comment section. Okay, I'm not covering any chart, anything today, because this particular video is purely based on risk management and position sizing. Most of you were not able to understand how I should consider the leverage while taking the trade, because I am, suppose you are trading in intraday cash market, then you have to use leverage. So this is the best, this video will clear all your doubts. I hope this will definitely clear all your doubts. Okay. Huh. So what we have covered today, we have covered isn't just a set of numbers on a spreadsheet, it is your professional edge. Most people think trading is about predicting the future, but it's not. It's about managing the present. When you follow the 1% rule and respect your max daily loss, you are not just protecting your capital, you are protecting your mind also. When you know exactly what your total quantity should be before you click that button, the fear disappears. Why? Because you have already accepted the cost of doing business, right? If you hit two or three stop losses, you should not panic. You simply check your dashboard. If loss is within limit, you should go for the next trade. If you are under your loss limit, you take the next high probability setup with full confidence. If you have hit your daily max loss limit, you should walk away with your head held high, knowing you will live to fight another day, right? See, if your max loss limit is hit, no need to go for to take, no need to do revenge trading and everything, over trading, right? Never do that, because market is not going anywhere. It will again, you can again take trades tomorrow, right? Remember, the market doesn't care about your feelings, but it deeply respects your discipline. Stop trying to be right and start trying to be consistent. Use this math, what we explained in the risk management and position sizing template. Use this math to turn the chaos of live market into a structured, calm, and profitable business. So go out in the market, stick to the plan, and let the mat do the heavy lifting. Let me know whether you have questions about this sheet, or suggestions for the next topic, or specific setups you want me to analyze in future videos. Drop them below in comment section. I read everyone, every comment. So don't worry, I will definitely look forward to making videos on that particular suggestions. Until next time, trade smart, stay disciplined, and I will see you in the next video. Thank you.